Good morning, everyone. I will try not to eat my fruit and destroy the microphone while I look at some of the stuff. Um, First and foremost, let's go over the Reddit option. This guy is up about 100% for me. I only bought one call because I try to be very careful with those things. I try not to go all in with options. I usually do a very small percentage of my portfolio. I try to be careful because I've lost a lot of money on options, but Reddit so far has turned out all right. It could turn around soon, but it's I've got it for the month, and my hope is uh, as their earnings and whatnot improve, and as the market improves, as Iran ends, I hope to see a little bit of a bigger run up. But as of right now, Reddit's doing good. They posted very good numbers. I'm not going to go over the details. What else are we looking at? So everyone knows Shift 4. Well, sorry, everyone knows that if you buy a stock and it goes down the following day, you have to sell it. So thankfully, it looks like Shift 4 is up today. When did I buy it? Around 44, 50, 44 something in the low end. It's up to 46. So we can keep the stock. Same thing with ServiceNow. What did we buy it at? 87. Bought it yesterday. 87, 88. I think 87. I have to check my account, but hopefully that doesn't turn around because I'd like to keep that stock. Looking at the stuff. Oh, not hood. Sorry. Yeah, this is a little bit more strength as far as support than we've seen for quite a while on Shift 4. It's just been dropping, dropping, dropping. We've had a little places of consolidation, but for the most part, it's been heading down. This is the first time I've seen in a while where we just have a little bottom, a nice bounce down, but then like a lower, like a, it's like instead of going up and then heading below again, we're hanging out here for a while. So I think this company is very undervalued. Obviously, price can always go lower, but from a technical standpoint, I think that this is a nice little. We're consolidating in this area pretty nicely. At some point, I think this is going to pop up again. So let's hope for the best on that. Where's ServiceNow? ServiceNow has definitely been struggling, but man, I don't know. The more I look at the numbers on these guys, they got a they got a forward priced earnings of 20. They're still growing pretty nicely, um, unless they have something catastrophic happen in their business in the next year. I should be okay. Qualcomm is down, still up, but can't go up forever. But that 120 price is looking a lot nicer than the price I got here. But the real reason why we're here is, well, I guess we could go over ZETA before we go over HYDTF, which is struggling a little bit. Where's ZETA? ZETA, and I don't want to. I've taken small positions in a lot of stuff. I've done little options trades. I bought 100 shares of this company or that company. I bought 1,000 shares of ZETA. This is a fair amount of my portfolio. I cashed out of some stuff. My average price is about 17. And, I would have liked to get it obviously at the 14, but when I look at the price history of these guys, their average price is basically between like 16 to 20. I mean, they're up in the low 20s pretty frequently, and then they're in the 18s most of the time. They got these little dips here and there, but man, they are strong. I can't analyze this a ton because I'm not an expert on that. Some things are more obvious to me than others, but man, their numbers are insane. They are Everyone talks about the rule of 40 or Palantir is like a rule of 120. Like these guys have like a rule of 60 or 70. Um, I'm not going to go over the earnings because like a couple other channels have done that a lot better than me. But man, this is my next position. This is my next one. I uh, I own a lot of Hydrite, and we'll go over them. They have very positive earnings, very positive outlook. They're down today, but man, ZETA is we're talking like 50% year-over-year revenue growth. Um, all the all the metrics are up a great deal. Um, their revenue from AI, their Athena AI is doing well. Like all the pieces of their business. They also talked about Trade Desk, which let's look at Trade Desk TTD. A longer chart for them. Yeah, these guys had a nice gap up, a huge gap down. These guys are just floundering, and they're definitely not out of money. But the whole narrative with them is that they're not going to grow. Their lunch is in a sense being taken. I don't think these guys are a falling knife anymore. They may consolidate down here. They may recover, but the the narrative behind that is that they do not have the innovation or the data to do what ZETA does. ZETA owns their data, they're fully integrated marketing, and everyone that is working with them pays them more over like year over year. The amount of money that these companies make by paying ZETA is extraordinary. Sorry, I took a bite of blueberries. Now it's gonna sound like I'm chewing. I forgot. Anyway, ZETA, I'm very, very bullish on. I actually did a little comparison on their price to sales as far as they have a price to sales of 2.5 right now. ServiceNow has a price to sales of 7.1. Palantir has a price to sales of 93. And of course, the reason for all these is different. Palantir's priced so aggressively because they're one of, if not the fastest growing company in the world. Insane margins, partnering with everyone in every country. Like they basically are growing as fast as they can. They cannot grow faster because they do not have the staff or the time to onboard and get people acquainted with the product quicker. So they're literally growing as fast as they can. They cannot grow faster currently. And the theory is that they have a monopoly on what they are doing, so they just have a huge moat. So that's why they're valued so high. But if ZETA was priced and the same price to sales as ServiceNow, as ZETA is growing much faster than ServiceNow and arguably has a safer moat, they should be closer to $51 a share. 52 more accurately, actually, which is a pretty big upside. And ZETA's analysts, of course, they have them between 24 and 36 for a year or longer. But yeah, if they were priced like Palantir, which I don't think they should be priced like Palantir, they'd be like $680 a share. What's interesting is that their revenue and their income, Palantir is actually very profitable. ZETA is still bordering on becoming profitable, but their revenue is growing very fast. So we're looking at, I don't remember if it was last earnings they had. Yes, they had profitable earnings last time. Very, very close. This time it was down 4 cents, which is kind of on par for the last few quarters. So they're getting there, but they're definitely plugging their money and their capital into growth, which when they're small like this is good. Market cap of 4.4 billion, small company, definitely a lot of room to a lot of room to grow. Very positive on that. Let's go over, yeah, Hydrite. So, well, I guess before we do Hydrite, let's look at their stock price. They're actually down today. At one point, they were down nearly 30 cents. Not a huge dip. I mean, they opened up high after the earnings, and then they dipped a bunch. This is obviously like profit taking. Um, People don't really seem to understand or maybe just people are like looking for a trade. That's fine. But Hydrite, this is basically they're covering their quarter four and year end for 2025. So they signed 11,000 licenses, um, which is huge. Um, that is going to be big money for them over the course of the year, big subscription money, and then a lot of services from those licenses going through their system. Their revenue for, let's go to the full year, up 121% from the previous year, which this is probably going to be big numbers for a couple years because they're so small. Revenue up 95%, EBITDA up 1,700%. Um, uh, Rising operating leverage. It fell from 38 to 22%. Year-end cash position 15 versus 1.9. We'll talk about this because they actually have a share buyback program to buy back 10% of their existing float. 10%. Google can't do that. Google makes a ton of money, but their float and their valuation is so high, they just don't have the money to do that. But um, Google would need to basically spend $400 billion to buy back 10% of their float. So the fact that these people are able to do this early on is good, but we'll get into that later. Improving EBITDA, that's all good. Quarter four, let's look at that. Quarter four 2025 versus 2024, 270% year-over-year growth. This is of course all going to be pretty big. Revenue 200%. Adjusted EBITDA, I mean, I don't even know how you do that. A loss versus that kind of a gain. They're rising operating leverage. Their OPEX has a percentage, fell 15% versus 34%. And let's look at their stuff. So here's their numbers. For the 3 months ended in 2025, they made $16 million. Let's see. Gross revenue up, GAAP revenue up, gross margin much better. Adjusted EBITDA, I'm not too worried about all that stuff. Their operating expenses are basically kind of, if I was speaking this to a 5-year-old, basically they're not spending much more money, or they're spending less money, but their margins are improving because basically all their expenses are set up. Their system is set up, their website is set up. Everything after this is just going to be more and more profit, better and better margins, which is good. Their VSDH1 platform is all set up, and they expect that to grow very, very significantly this year. You can read this at your own time. I don't have to read through everything, but as they get more licenses, I see these guys basically displacing a lot of hospital nurses that do things like dermatology appointments or injection appointments or all this other stuff. They can basically do a lot of hospital services at people's homes. Let me see. Balance sheet liquidity. Well, I guess we could read through. You could research this and read it on your own time if you really want. The 150. I'm trying to find their guidance. At the end of quarter one, 2026, they surpassed 12,000 licenses sold. Range focused. We look forward to annual finds, upcoming earnings call. May 1st, 9 a.m. 10 p.m. I'll look up that at some point. Let me see. This kind of describes, yeah, developed in partnership. Yeah, so this kind of goes over a little bit of what their stuff is. But they're gonna buy back a lot of their shares. Let me just see. This is okay. So this is what's interesting. This is the conservative floor case. Um, I guess we could look at those, but we might as well look up here. Their revenue for their quarter four revenue this year is expected to be more than their entire 2025 earnings. And like their 2025 quarter four earnings was more than their 2024 earnings. Like they're growing pretty rapidly, and I know they're pretty small now, but if these guys can get to the point where they become a $500 million revenue company up to $1 billion revenue company, we're looking at a year or a couple years for that. But yeah, I just wanted to confirm I wasn't crazy that they. This is kind of like where some companies give a baseline and then they do beat and raises as they go forward to kind of build momentum. I think that's what they're doing. They're probably going to beat this pretty easily, but they're estimating for 150 because that's crazy growth already from where they are. So for the operators, the company completed a 15 million bought deal financing led by Canaccord Genuity Group, provide working capital. Okay, cost structure, profitability. Well, let's go with this thing right here. So this is another thing that's pretty exciting. Whatever their earnings and revenue are per share, price to sales, whatever you want to look at it, it's going to get a lot better because for the next year they're authorized to buy back 10% of their public float. And I believe they have about 50, yeah, about 50 million shares. About 50 million shares. They're going to buy back about 10% of that, which is close to 5 million shares. And 5 million times $3, that's $15 million. And these guys have 15 million in cash today. Not saying they're going to burn through all that, but they are. If we look at the volume on HYDTF, not that they're going to buy this on the open market or whatnot, but the amount of volume that HYDTF typically has, like this is a big buy right here. That's about 14,000 shares, 13 whatever. But most of their stuff is like blocks of 2,000, 3,000, whatever it is. Like they're smaller amounts, and any type of like I'm not sure how the buybacks work, if they like take them off of the open market or if there's like the way I thought I understood is there becomes like a price point where there's a floor. If these guys basically are buying their shares back and they have a price floor of $3, then this becomes our new floor. And then all the sellers slowly get weeded out and we just start kind of trending upwards for a while. And if we ever dip down, they buy it again, or they have to raise the price at which they buy stuff. So anyway, very positive stuff for HYDTF. They don't have a YouTube video out with their stuff as far as their earnings call, but you guys can read this at your own pace. This is all great, but again, they are a young company. They're just getting started. So, adjusted EBITDA, 136,000 versus 2.5 million. That's a huge beat, but that is very easy to do compared to a company like a Google or an established company that's massive. Growing that kind of at that pace is much more common when you're a smaller company when you're growing that fast. So, like I say, if their revenue gets up to $1 billion, they're not going to be able to do the whole 100% year over year for that's just not going to be realistic. So big growth right now. Everything's very positive. We'll just have to see if they can not necessarily maintain this level of insane growth, but at least get to a nice level of, I think I'd be happy. You're going to have another year or two. They're expecting 150 million in revenue this year. That's going to be Um, yeah, that was 121%. If we go to 150, I'm going to say that could probably be closer to 160, 170. But we're looking at a 500% year over year. So we're going to have like this inflection point where they just blast off for a year or two, and the next year they'd have to be at 750 million revenue to match that, which I don't know if that's possible, but even if it's at if it goes to it goes to 300 million, then it goes to 500 million, and we just go by a couple hundred million a year on our way to a billion. We're looking at this isn't a moonshot in the next month. They're not going to get a deal with Nvidia to supply something weird, and their stock price is going to skyrocket. This is a long-term position of a company that I think will actually become very big, very profitable, and have a nice steady growth for the next 5 years or so. But anyway, I'll try not to keep this super long. Um, if you guys haven't already, I've researched ZETA on YouTube. There's a lot of guys that have, let me see if I can find. There's a couple people that have followed it, but there's a guy that just went over it directly. His name's Endicott Invests. It says ZETA grows 50%. No one's talking about it. Quarter 1 earnings. I'll just put him on the screen. It's this guy right here. Um, I watched their earnings call. I watched the summary. But he does a nice little breakdown, and he does it better than I would. So check him out if you're interested. I think ZETA is going to be a core position for me for a while. In addition to the bigger companies I have, I would consider, if it was me, I would consider selling my Palantir when it's up so high, simply because ZETA is going to have income. Well, not income. They're going to have revenue similar to Palantir in a few years. Well, they're not going to have revenue similar to Palantir's in a few years, but they're going to have revenue in a few years for themselves that's similar to Palantir's this year. I don't know if they'll have the net margins and the income and the earnings, but I don't know. These guys might be the future of marketing for a lot of places. So we'll see. Sorry, not Hydrite, but ZETA. So all right, I'll leave it there. Yeah, very positive news across a lot of the stock stuff we're looking at. Pretty happy with things. Hopefully we don't have another war or a bomb go off somewhere that messes with the market. It'd be good to have some peace for a while. There's just been a lot of chaos for the last 30 years. So take care, guys. We'll see you later.